So I think we're eventually going to see something break in the financial system, which is going to wreak havoc across the board. And it could obviously spur a surge higher in precious metals because, let's face it, people are worried about stocks. They're worried about the currency, the fiat currency like the dollar, and people just don't trust the banking and the financial system. And that's why I think we're seeing precious metals do so well. There's the least amount of trust in governments and systems right now.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for November 3rd through November 10th, 2025, while supplies last. First this week, 10-ounce silver Buffalo bars are just $3.49 over spot per ounce. Next, 2025 2-ounce silver Canadian Rockies coins are $4.49 over spot per ounce. 1-ounce gold Rand refinery bars are just $135 over spot. Finally, pre-33 XF $5 gold Liberty are only $45 over melt per coin. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Chris Vermeulen from thetechnicaltraders.com. Chris, thank you so much for joining us today.
Always a pleasure, Elijah. Thanks for having me.
Well, it's great to have you today. I did want to discuss the gold and silver markets because obviously since the last time we had you on, we've had quite a wild ride. Your take on where we are right now.
Sure. Yeah. Well, there's kind of a lot to unpack. If I share my charts, I'll kind of give you a bit of a visual of how I see things unfolding here. So let me pull my chart up. If we take a look at the chart of gold, this is the daily chart. Obviously, we've had this kind of blow off phase, a short-term kind of momentum move to the upside where a lot of people piled in. Now, gold kind of had this feeding frenzy of if you weren't long gold these last kind of 6 or 7 trading days, you could cut the air with a knife. It was so intense that if people weren't in, they had to get in. And we could see it on the charts. We could see it with our custom indicators. There was just a lot of FOMO. And I was warning, we've got to be ready because usually when we hit this level of FOMO, we need to expect a sharp pullback. Now, it doesn't mean gold is topped. It just means we need a little bit to let a little air out of the bubble and to dissipate. And that's what we've seen right now. So we've seen gold pull back, silver, miners, platinum, palladium, all of them. But to me, it's actually just the first pause and pullback within this a much bigger move. I do think we're going to see gold end up rallying to roughly $5,100, $5,200 an ounce over the next probably 1 or 2 months. I think it could be very quick, depending on how things unfold. So, a lot of people, it's funny because we hit a measured move target right over here on gold, and we closed out a very short-term trade. Now, we were just trading an ETF just for this explosive momentum move. And when we got out, everyone wanted back in because the market kept going higher and they felt like they were getting left behind. Now it's interesting because I actually like gold down here, but people don't want to get into gold. They think it's top. They think it's pulled back. There's been a lot of damage. So that to me is a contrarian indicator. When everybody wants in, you got to be aware that we might have a pause or pullback. And then when other people don't want in anymore, that's usually when it's going to find a bottom and rally. So I like gold here. I think it's trying to still stabilize. As you saw, Elijah, that 1-day drop in gold, it was like a 5% move. Biggest move in like 3 decades for gold in a single day. So that created a lot of fear, and that fear's still in the market. And we kind of continue to see this trickle of selling in both gold, silver, platinum, palladium, and miners. And we're just going to let that fear finish. So let that kind of dissipate. And then I think that pressure will relieve. And then I think we're going to be off to the races to another big leg higher.
Now, one of the things you've been talking about quite a bit on your YouTube channel is that there's potentially a parallel of what we're comparing what we're seeing right now to what happened just when the stock market began to crash in 2008. And a lot of people talk about how metals followed the stock market down, but actually initially metals rallied when the stock market was selling off. So your take on that, and a lot of people are talking about the stock market being toppy right now, potentially already making a top. Your perspective on the stock market and how precious metals might react in the near future.
Sure. Yeah. Well, if we take a look at these two charts, the one on the left over here is the 2007, 2008 stock market top. We saw the S&P 500 hit an all-time high. We're kind of at that level of right now where we are on the right-hand chart. The S&P 500 is at an all-time high. What we've also seen here is this yellow line is the chart of gold. Now, gold and stocks have been rallying for the last couple of years substantially to the upside. It's the same where we are right now in 2007. When gold rallies, as you and I have talked about in the past, Elijah, we got to be aware something big and bad is brewing that we just don't know what it is and we don't know when it's going to happen. But gold is generally a warning sign that there's going to be some big change in the economic kind of cycle and potentially the stock market cycle as well. So what's interesting is if we look at the chart from 2007, the stock market started to show some weakness. We started to get some red bars, which we're starting to get some red bars where we are right now. But if we take a look what happens to gold in the stock market, so the stock market starts to struggle, stock market starts to sell off. And what's happening here, I think, is money is moving out of stocks and it's always looking for a return. Money is looking to make money. So that money is coming out of equities and it goes into gold, which is why we see gold shoot higher. And gold ends up having this very big rally. Rallies about 30+% to the upside, while the stock market actually sells about 20% off. So that's a pretty interesting scenario. Now, if we kind of go back and look at where we are right now, look at these other layers of the precious metals space. So these charts below is the chart of GDX, which are gold miners. We've got silver, platinum, and palladium. And we just had this first wave, this feeding frenzy of everybody wanting to get into gold miners. They all wanted to get into silver, platinum, and palladium. So now the precious metal space isn't kind of a sleeper. Now it's actually got the masses starting to move in. And this is the first pullback. Now, what's interesting is if we just fast forward a little bit, we see the markets all cool off for a few weeks. This is a weekly chart of all of these. So, for about a month and a half, they cool off. And then what happens is the stock market tanks at the top and gold, silver, and the whole precious metal complex, they all shoot higher dramatically. They all go higher by about 30 to 60%. All of the different commodities here. And so if I was to just scroll back to where I think we are right now in this market, where gold's starting to pull back a little bit, we're having gold pull back where we are right now. Take a look at the same charts. We have the whole wave of people moving into miners, platinum, palladium, platinum and palladium here, all down below. So we've had this first wave. And I believe if we were to scan forward to where we are, I think we are going to see all of these have one more big push higher. So this little hiccup in gold right here, I believe is the little hiccup in gold where we are right now. I think we're just seeing this first little bout of fear and panic, and it's pulling a little bit of money out of precious metals and things, but I think we're about to see another big push higher. So that's kind of what what the charts are pointing to at this point.
Now, some analysts are pointing to levels of 3,500 in gold, for example, or $40 in silver being key support levels. Do you anticipate much more pullback from here, or do you think most of the selling is over with?
I think most of the selling is over with. I do think we could see it pull back a little bit more. So using Fibonacci retracement, which you and I have covered many times, a very, very powerful tool. Fibonacci sequence is in the universe. It's everywhere. It really is, to me, one of the ultimate tools to get an idea of where price could pull back to and also where it could run to. And that's how I really get most of my targets. Now, if we use Fibonacci retracement from the May low, from this giant bull flag pattern, to the high that we saw recently and where we are, usually the market wants to pull back into this sweet zone here. This is a 38% retracement or pullback from the high all the way down to about halfway of that move. So we have already seen gold kind of tag this level. It's already touched that 38. The question is it going to kind of drift down a little bit more and scare out a few more investors before it wants to turn that corner and go higher? So there is potential for it to work itself down and create a lot more fear and create a bottom here. But overall, it's done most of the downside, I think, is done. If we were to look at this from a percentage standpoint, there's potential for gold to pull back another 3-5% potentially if it was to push that to the max. Now, the nice thing about Fibonacci is even if it comes down to this level or has bottomed, we can project where it should go next. And that's going to be based off this last run, the cycle low to a cycle high. And we can come down to the current pullback that it's had. This will tell us where gold is likely to move to. So it's telling us we should see the first rally to about 4,600, 4,700, and then it'll go up to about $5,100 per ounce going forward. So there's a pretty nice projection. Obviously, if gold gets some traction here, it could really pick up speed and go parabolic and give us, on the monthly chart, a couple huge green bars to the upside going forward. So that's kind of my take on gold at this point.
What are your price points on silver as well? Obviously, that $50 level is very psychological level for 45 years now. That has been significant, and we did decisively break above that for a few days, but then obviously have fallen back below it. So, any specific levels you're looking for in silver?
Yeah. So if we were to kind of take where I think silver could pull back to now, I'm not going to use this particular sharp drop that we had. I think if we were to look for a retracement in silver, it has tagged the 318 level. I do think it could potentially work itself down to maybe even, $42, $43 an ounce if we have one more little bout of selling. But overall, when we look at this, the upside target for silver is pretty substantial at this point. If we take a look, we could see silver run all the way up to about $67 per ounce, which would be obviously a couple big green monthly bars. And I like to use silver for this analogy, which we need to be aware of, because when things that go straight up in price in a parabolic kind of bubble phase, they tend to come straight back down. So let's just go all the way back to the last bubble that you even talked about way back here. You got to be leery. You got to be a little worried when things go straight up like this, and everybody seems to be wanting to move into it at the same time. If we were to look at this and say, hey, where's that the $67, potential upside, we could still see, very big, huge spike to the upside in silver, a couple big green bars. We just need to be aware when things go straight up like this, they can come back down very quickly, and then they need to build a new base. So that's kind of where we are. I think there's quite a bit of upside in silver in miners. From there, I think eventually we'll see it pull back to some regard. It'll build a new launch pad, and then I think we're going to go a whole lot higher. In fact, I think it'll be something similar. Let me just go back to 2008. I think it'll be the same for gold and silver, whereas silver had this parabolic move. It shot up just before 2007 market top. And then we saw it pull back about 60+%. Well, I think we're going to see something similar to that, because I think if we see it rally up and we go into a financial reset, then I think we're going to see it pull back fairly substantially. And then from there, I think it's actually going to start a new rally that could send it way up into the 80s and the 100 mark going forward. And if I was to kind of just drop back to gold for this scenario as well, I think gold would eventually find a top here, and then it would pull back into a consolidation zone, just like in 2008. It pulled back about 34%, and then it goes into a multi-year rally. So then after that, I think gold could be up in the $8,000, $10,000, $12,000 mark. But there's a roller coaster ride between here and then, right? I think we're going up a hill first, and then we're going to go over the edge, and everybody's going to scream for a little while, and then it'll stabilize, and then I think we go up for a much bigger ride. So I'm bullish on gold and silver long term. Short term, I'm bullish, but if you look forward, like over the next 6-8 months, they might be back where they are right now, or they might be a little bit lower. So long-term investment wise, I mean, it's still a long-term play. And short-term traders, I think, have got potential for another big push to the upside.
So I guess for those kind of dollar cost averaging, good news is we could see lower prices from here, even in the intermediate future. When it comes to the stock market, you mentioned how there are really concerning developments there. Could you kind of give us a deep dive on that? What are some of the signposts that are showing that we could be possibly topped and heading for a significant downturn from here?
Yeah, well, the stock market it's still in an uptrend. It's not the strongest stock market. Like it's not a full-on broad market rally. The Magnificent Seven are doing a lot of the heavy lifting. But no matter how strong or how weak the market is, when it's trending higher, you do need to own it. You need to be long a trend. And so the trend is still up. We've seen a recent pullback. To me, it's actually the big barometer really is the fact that it's Magnificent Seven driven still. We're kind of in this AI bubble phase where it's people just are investing left, right, and center into AI and buying anything that has any AI stock that has, chips and all that stuff. Gold and silver are, to me, kind of the warning sign that something is unfolding that people aren't going to like. So, at this point, you really just have to ride the trend. They say the trend is your friend, and the trend's more likely to continue than it is to reverse. So that's why you need to really follow price. Don't get too caught up in the fundamental analysis and all of that stuff. And, the warning sign in the stock market is that it's not a super strong market. When you look under the hood of the markets, it's not super strong in terms of all the market participants. A lot of stocks are struggling. And again, gold is just that barometer. So I'm just kind of repeating myself here.
Certainly. Now, when it comes to, I guess, some of the fundamental reasons why the stock market might roll over and why gold has been rallying, if you look at the last couple of years, you mentioned how that is signaling something. Do you have any idea of what that might be going forward?
Yeah, I'm not sure. I think we'll probably see, valuations for stocks are still pretty ludicrous up here. So, the PE ratios are out of whack. So things seem to be overvalued. I think we're going to see something break down probably in the financial system in terms of banking. We're already seeing credit, mortgage-backed securities is higher than it's ever been. The delinquency rates, we're seeing problems with, I think, the banking sector. Everything seems to be swept under the rug. So I think we're eventually going to see something break in the financial system, which is going to wreak havoc across the board. And it could obviously spur a surge higher in precious metals because, let's face it, people are worried about stocks. They're worried about the currency, the fiat currency like the dollar, dropping in other countries in their own currencies. And people just don't trust the banking and the financial system. Like banks take your money. It's supposed to be a store your value, store your money. Instead, they just gamble it and they go bankrupt and you lose everything. And that's why I think we're seeing precious metals do so well. There's the least amount of trust in governments and systems right now. We know all the data for economic data they keep just changing the calculations and formulations for everything. So, what used to be normal economic data, they've now tweaked things so it still looks good, I think. But the reality is we had the original formulas that we've always gone from. Things are not that strong. So people are moving and buying, their big gold pet rocks and their silver pet rocks and their platinum and palladium because they want to be out of the banking system in case something implodes and blows up.
Now, if we look at the dollar index, I know other analysts are thinking that could rally soon, which could put pressure on metals. What do you anticipate there? And do you think it's possible, it has happened in the past, where the dollar actually rallies with precious metals as well? What do you anticipate for that going forward?
Yeah, I think the dollar has it obviously had a very strong uptrend early in the year. Now it's gone down, and now I believe it's turning a corner. It's starting to head higher. I think we could see the dollar index back up at 110, maybe even at 116 or something. You look forward a year from now potentially. That will obviously put some pressure, some headwinds on metals. But we can see in this specific market environment, we can see the dollar move higher. We can also see precious metals move higher. They're not always an inverse relationship, as you know. So I'm not too worried about the dollar moving up just yet, affecting gold too much. I think there will be a point eventually where there's enough fear in the global system that people are dumping stocks. Eventually, the dollar will start to move higher. The U.S. dollar index tends to rally and strengthen during uncertainty and chaos. And I think when the dollar really starts to put in some very big extended runs, I think that will put pressure on metals, along with liquidation. Margin calls and things like that will naturally have people forced to sell gold and silver, even if they don't want to, because they hold a bunch of equities and different assets, could be real estate, and they get underwater, they get backwards on them, and they're forced to sell. So I believe we're going to see a strong U.S. dollar over the next 6, 8, 12 months here.
And if our viewers are interested in learning more, they can go to thetechnicaltraders.com. Before we leave our viewers, did you have any last thoughts? I guess with respect to, how do we navigate these markets going forward? Because it seems like we're going to be seeing quite exciting action here.
Yeah, I mean, the markets aren't that complicated, really. When you peel back all the news, forget the politics, forget the fundamentals, forget the Fed and all that stuff. Price action goes up, down, or sideways. And so if you peel things back to that level, you have to attack it with a strategy. You have to have a way to identify when something is trending up and it's a strong enough trend to own. You need to know when it's trendless and you should just get away from it until it starts something new. And you need to know when something falls. Technical analysis, which is what I focus on, does exactly that. We can follow the markets very closely. We know when to jump in when a new trend starts. We know when to trim profits when it's starting to weaken. So, the average investor, most of them don't understand this. They don't know how to do it. And so they feel kind of lost. But really, it just comes down to follow price. If it's moving higher, you want to own it. If it's not, get away from it and go find something else. And so you need a strategy. That's what I offer at the Technical Traders. I manage my own money. I share my exact portfolio, my allocations, my trades, my daily analysis with subscribers. We all trade. We all make money together. And I focus on protecting capital first and then growing it. I don't look to swing for the fences. You won't catch me into, penny stocks and all that stuff. I'm like, how do we manage, multi-million-dollar portfolios very easily with a couple ETF trades, 5 to 12 adjustments a year?
Fantastic. Well, Chris, once again, thank you so much for your time today, and God bless.
Thanks, Elijah. Take care.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for November 3rd through November 10th, 2025, while supplies last. First this week, 10-ounce silver Buffalo bars are just $3.49 over spot per ounce. Next, 2025 2-ounce silver Canadian Rockies coins are $4.49 over spot per ounce. 1-ounce gold Rand refinery bars are just $135 over spot. Finally, pre-33 XF $5 gold Liberty are only $45 over melt per coin. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.